speaking to Nigeria's debt office on Wednesday, which announced that the country redeemed $500 million Eurobond paper that matured on the same day. The instrument was floated in July 2013. It's a 10-year paper trading at a coupon of 6.375% at the global market. Now let's get a wider view of this and more as we bring on Tajudeen Ibrahim. He's the director in charge of research and strategy at Chapel Hill Denham, one of Nigeria's biggest investment banking and securities trading group. Good evening to you, sir. Thank you very much for connecting to the show.
Good evening. Thank you very much for having me on the show.
Thank you so much. How important was that Eurobond redemption for the new administration, the $500 million done yesterday?
I think the redemption is very important for the new administration because it is positive for the administration, and it is also positive for the outlook of the country as a whole. So as we have a new president, and it is during his time, in the first early days of his tenure, Nigeria is able to pay back $500 million. I think it is remarkable, and it speaks a lot volume for what investors should expect from the government, and also in particular for the new administration. We bear in mind that within the past 5 to 7 months, Nigeria's credit rating had been downgraded. And if we now have a new administration that redeems $500 million, it further sort of, allays or reduces the fears or concerns of foreign investors, in my view. I think it is positive.
Interesting. So what is the size of Nigeria's Eurobond that are still outstanding right now for redemption? The DMO says yes, about $1.8 billion been redeemed since 2018. So what's the size that is left? Is there anything to really worry about?
So it is not something much to worry about. Number one, because of the size, what we have left to repay is $15.12 billion in Eurobond. And I think what is also important to bear in mind is that the maturity profiles of those outstanding Eurobond is well spaced out. The next Eurobond maturity, for instance, is in November 2025, and that is about $1.1 billion. And we still have it up until like 2051. We have our Eurobonds that will mature, at that point in time. So well spaced out, and at the same time, the size is not too much. But this redemption of $500 million, makes Nigeria to have a 3.2% decrease in the outstanding Eurobond. So I think, what we have outstanding, number one, in terms of size, is not too much, and we have good spacing in terms of the maturity of the outstanding Eurobonds, in my view.
Oh, great. So again, Tajudeen, give me your view, your outlook on the repayment of these Eurobonds in view of the, I'm sure, exchange rate, FX inflows and all that exchange rate. Naira rates will have a very important, will be very key for what happens to the other bonds that are still out there to be redeemed by Nigeria.
So if we look at the outstanding Eurobonds in issuance and we consider those two elements, the first is exchange rate, the second is foreign currency inflows. I think on the first element, the outlook is positive for Nigeria and also for foreign investors, largely because of the reforms that we have seen so far that have happened in the foreign currency market since the new administration began. So the convergence of the rates in the market is an indication of predictability by investors, and it speaks also to transparency of our foreign currency market. So it is positive, on that front. I think a lot more foreign investors will be more comfortable with Nigeria on our foreign currency going forward. If we talk about foreign currency inflows, I think the outlook is also positive. Number one, when we consider the what we are seeing in terms of inflows expectation from crude oil sales. The new administration is determined to ensure that we earn more crude oil inflows, and at the same time, they have plans to uplift the non-oil foreign currency inflows for the country. Not less than $40 billion, is their plan to ensure that Nigeria is able to earn annually, over the medium to long term. I think all those are positive elements in terms of foreign currency inflow expectations for the country, at least for the current administration, in my view.
Okay, what are the optics for the country in approaching the global debt markets in the near to medium term? When next do you think Nigeria will have what it takes to go back to the global marketplace to raise whatever amount of fund to support what the current administration will have to do on the table?
I think, in the short term, Nigeria has to really prepare the grounds, to have the courage and also the required credit rating to go to international markets to borrow. So I think if we take a 12-month look at it, that is possibly not the best time. Let us take a look at it beyond the next 12 months. By then, we will have seen the impact of of all the reforms that the government has embarked upon. Will have begun to see their impact on the economy and also on the earnings capacity of the government. We bear in mind that the current administration is a lot focused on increasing revenue generation. If that materializes within the next 12 months, I think over the next 1 year, we can begin to think about going to the international market. By then, even interest rates globally will likely have started to go downwards, because they currently are at their peaks across the world. So we will not be looking at the short term, I think. We should look beyond the next 12 months before Nigeria goes to the international markets.
Yeah, interesting. One of the things you talk about, mentioned a bit earlier, touch on in your comment has to do with ratings. So I'm sure we all saw how Nigeria rating was cut down and the outlook moved into negative territory before the elections and all of that. The Bank of America research report, which was published June 28th, part of which was already being shown on the screen, was that Nigeria would receive a better ratings. That's what the Bank of America has, that at least Fitch ratings will give Nigeria an upgrade in terms of rating for this year. Then expect the S&P and Moody's to follow suit in 2024. What are your views on this? Do you think Nigeria is on the path to those better ratings, sovereign ratings, that is?
I think we are on the path to an upgrade of our credit rating. If you consider, number one, the fact that Nigeria was able to redeem the $500 million that matured yesterday, that in itself is a plus for the country and also for our rating. The second element to my mind is around the revenue generating capacity of the country, that I believe is going to improve. And that speaks to tax revenue generation, which is non-oil. So that is going to improve, and I think that can also support an upgrade, because if we capture the current debt level and we capture also the debt servicings under a much bigger revenue base, then the worries of international investors and also credit rating agencies will reduce. So I think we will likely see an upgrade of our rating to B and possibly positive outlook within the next 9 to 12 months, in my view.
So how would all of this rub off on the private sector? When you do a sovereign, you're able to repay your credits to the international private investors. Then, of course, you talk about how will it impact Nigerian institutions, perhaps in the financial services industry, like banks that have exposure to the global marketplace. What's your outlook on that? So
for Nigerians, and speaking to the banks, it is going to be positive for the banks if we consider their dollar investments. I think it is positive in that regard. And if we look at the entire foreign currency reforms, the banks seems to be the largest beneficiary in the economy, largely because most of them have dollar-based assets. That is one. The second element is some of them are able to book larger revaluation gains on the back of foreign currency devaluation. So if we are looking at the banks, the outlook is positive. But if we take a look at non-banks, it is less positive than the banks, and one would expect that backward integration by manufacturing companies will be a major thing for consideration to reduce the impact of foreign currency volatility, particularly when we talk about imports of goods and services. So those are some of my views.
All right, thank you so much. I do have a pleasant evening, and we really appreciate those professional insights into the latest around Nigeria's Eurobond market. Thank you so much for your time. Tajudeen Ibrahim, Director in charge of Research and Strategy at Chapel Hill, Denham.